can see immediately market touched this 38.2 retracement level. I just wait for my confirmation, and I got a candle break and close below the 23.6 level, which give me my entry trigger to go short. Just look at it. Look at how I ride this trend. Market was able to break the previous swing low, just for you to know that we are heading in a downward direction. Before we dive in, let's go here for this intro.
Zombie apocalypse.
Fibonacci retracement. Because in today's session, you are going to handle three things. Number one, you know what is Fibonacci retracement. Number two, you know how do you use Fibonacci retracement to identify reversals and market continuation movement. And the number three is you'll identify how to use other Confluence and apps to your Fibonacci retracement and build up a strong trading decision, all in this video. So don't forget, don't go anywhere, stick to me in this video. I'm going to give you all the live update with this live current trade I'm running here, and you can see the running profit is almost $600+. This is huge number of pips, very huge number of pips, almost 400 pips. So you see, so let's dive in. So what is Fibonacci retracement? Based on my own research, Fibonacci retracement is a method of technical analysis for determining support and resistance levels. It is named after the sequence of numbers whose ratios provide price levels to which markets tend to retrace a portion of a move before a trend continuation in the original direction. So let me give you an exact clue of what we mean by that. The reason we use Fibonacci levels are just set of numbers, and is a method of technical analysis to identify when market pullback ends and market is ready for another continuation, or market would break a structure and headed lower or higher in an uptrend or downtrend respectively. Please don't forget to like. If you find value on this video, please don't forget to like this video, share this video, and subscribe to this channel. If you didn't find any value on this video, please kindly dislike this video for me, please, and also help me with a comment on how I can be able to improve in my next video later. So let's move on and dive into our market structure. So based on this now, you see anytime market moves up or down, as far as there's a break of new structure, there's always what we call a pullback or a retracement. Some people call it retracement, some people call it pullback, some people even call it corrective move, which is the best name you can identify it, because actually market have only two types of movement. We have the impulsive move, which is the long move, and the corrective move. So if you want to use that's the full explanation and full meaning of Fibonacci level. So let's move into our next agenda. Our next agenda is how to use Fibonacci retracement to identify reversals in the market. So what you need to do, always try and capture a swing high and a swing low together. What it mean by a swing high, what it mean by a swing low. Before this pullback, okay, let's assume at this before I enter my information, before I enter my entry, please, if you look at this long downtrend, series of higher lows and lower lows, higher lows, lower lows, higher lows, lower lows. You can see higher low, lower low, higher low, lower low, higher low, lower low, another lower low, another higher low. So you see the market is just trending from a very long position. So that's to let you know that the market has a tendency of creating a lower highs and lower lows. That's to tell you that this market is typically in a downtrend. This is a downtrend market because of what? It's actually carving lows, higher lows, lower lows, signifies downtrend. Cleared? Clear. So let's move on. So let's use the 1 hour chart, because you can actually use it on any time frame. It's just that you need to make sure, if you are using a Fibonacci retracement, make sure you are not using it in isolation. What I mean by you are not using it in isolation, you are trying to add more confluence to it, so that you can have a lot of confluence that will give you an entry trigger to enter your trade. So now let's move on here. You can see, so for those that are using the mobile phone, either iPhone or any other phone, just click here, go to object, and you see Fibonacci retracement here. If it's not here, click add object, then you come down, you'll see Fibonacci retracement. You see Fibonacci retracement here, look at it. So that's that about that. That's how you can be able to add the Fibonacci retracement on your chart, and look at it here. After I add it, so what I did was I kept my higher lows, higher highs and higher lows here. I marked out the fonts. Anytime you want to use it, make sure you identify 2 levels. What are those 2 levels? The higher lows and the higher highs. Which one is the higher lows? This is before this fullback. Also, so let's assume at this level for our entry, this was the low or lower lows, and this is the highs. So this is our lowest point the market reached before its current movement, and this is the highest point the market reached is before its current movement. So you for a downtrend, we start plotting it from the highest level down to the lowest level. For an uptrend, we can plot it from the from the lowest level to the highest level. Anyhow you want it, you can place it like that. But what I just want you to understand and observe in this Fibonacci retracement level, always make sure you are trading it from an area of value, which will lead us to our last part of the discussion: how to identify, how to combine Fibonacci retracement to create a very good and profitable trading entries. So let me tell you how we can do it. Number 1, you can see the retracement level are different levels on your chart, which market tends to react to them anytime price reach that level. Let me show you now. You see this 33, let's say this 23.6, you can see price is reacting to it and price is rejecting it. The same thing here, you can see price is also rejecting this 38.2, 50% also 61.8%. you see this also another level 100%. So let me tell you what we mean by adding confluence. Basically, looking at this structure here, after this break of new low, market come retrace back towards that previous resistance, which aligns up with what 38% retracement level. You can see apart from Fibonacci retracement, now we have another confluence. Look at it here, another level of resistance, because it was already broken here. Market retraced down, and after that market retest this area. But what happened? Market was unable to break above this previous resistance. That's tell you that market will still push down furthermore, and that's the trend I always get. Because I will advise you, anytime you are taking a trade, please make sure you are buying from an area of value, or you are selling from an area of value. In this video, or I think in my next video, I will explain what it means by area of value. But for the sake of this Fibonacci strategy, I'm going to give you a rule-based strategy on how to add more confluences to this Fibonacci strategy, and you can have a very good entry and a very good trading decision. So let me put it down for you here. So you see, market is acting as what? At a resistance level. That's the first confluence. The first confluence, market is reacting at a resistance level in a downtrend. After a breakout, market is retesting this area. We call it a retest. So anytime market made a pullback after a corrective move, market is trying to hit down lower for the next impulsive move, if it is understand. So after we have capped out our resistance level Confluence, now then we'll check, is this resistance level aligned with a Fibonacci retracement level? You see, we'll check. Yes, they are aligned. You see. And what will you do now? You will wait for a confirmation, because sometimes if you are an aggressive trader, fine. If it is an aggressive trader, you can just enter after the next candle he will enter. But if you want to be very, very conservative, somebody like me, which I always wait for confirmations, which will add more confluences and more rest of mind to my decisions. That's why sometimes if I take a trade, I will allow the market to run. Sometimes I would not even mind to put TP and stop loss, but I will give you the TP and stop loss dots in my VIP group. So we are not just trading in isolation, we are trading with confluences. What do you mean by confluences? You will have some more technical factors outside there to help you and support your trading decision. That's how to trade, and that's how professional traders also trade. You are trading from series of zones, probably from a demand zone or supply zone. Those are the zones that are going to give you a high profitable trade. Or we are trading from an area of value. An area of value is an area on your chart where you can be able to get a very good entry and a very good high risk to reward trade. Please don't forget to like this video, share this video, and let everybody get this video and get this update on this Fibonacci strategy for volatility 75 index. So let's move on. So after I've gotten another confluence, we should also wait for another confluence as a confirmation. For those that will use very aggressive entry, can enter immediately at the close of this new candle, because what happened, you see, this candle is not that it engulfed it. It's not a bullish, it's not a bearish engulfing, because a bearish engulfing based on the rules and the name, the open and the close of the candle should be engulfed. But this one, you see, this is the close of the candle and this is the open of our new candle. That was even a gap down, so we'll not say it's bearish engulfing. That was the reason personally I didn't enter the trade, because I was watching the market at that level. And the reason why sometimes I always try to capture out a trade before I even allow you to get it is because I want you to get it very correct. So after that, I waited for another candle, and this candle had two rejections from the up and from the down. Look at it here. This candle, this particular candle, it got rejected. This one, it got rejected. You see, there's a wick to the top, wick to the down. So I did not enter as well. I waited for the next candle, and this is where I get my comparison, because this candle has closed below these levels, and that's where my sell stop order triggered. Yes, I put sell stop order and it was triggered, and this is the current profit right now. So let me show you something. The only thing you need to understand with this strategy is add more confluences to your trade and you'll get a very surprise trading decision. So you can see now the market has reacted to this 38.2 retracement level, which align up with with a level of structure from this area, and it's also an area of value because it's a previous resistance, so it's acting as a support now. So yes, it's a previous resistance that's acting. No, it's a previous structure that we have broken, so it's retesting this area and it's protecting this area as a resistance in order to push down this price lower. And this is why exactly this level come into play. So you see, after I waited for that my confirmation candle, this third candle, you see the candle, this third candle we are seeing, this last one that I use as my entry, if you look at the candle very well, the candle also closed below the 23.6 level, which is a very good confirmation for me that the market is heading to the next level lower. And that's exactly what this market did. See, we have right our trend. So these are the levels. You see, this is 23.6 level that was broken down. So this is the rule-based strategy I give to you. So let me give you a recap of what we have learned today. Today, number one, you have learned what is Fibonacci retracement level. Number two, you have identified how to use Fibonacci to identify resistance in the market. And number three, you have also learned how to combine Fibonacci retracement with other Confluence and get a swap entry in the market. That's the third decision. So let's move on. So based on those three decisions, I'm very sure you can be able to build a rule-based system for yourself with this strategy. Because let me tell you, the good thing you need to do to help yourself, always try to make sure you get the basics, you get the knowledge. That's what will give you clue to know what you are doing. Look at it. And also, popularly, most popular Fibonacci retracement level are 38.2 retracement level, 50% retracement level, and 61.8 retracement levels. These are the three most popular levels. But we have other levels like this 23.6 level, we have the 0 level, we have the 78 level, we also have the 100 level. But these are the major popular ones: the 38.2 retracement level, 50% retracement level, and 61.8% retracement level. Please don't forget, for those that are new to this channel, don't forget to like this video, share this video to your loved ones. Let everybody catch the fips. So let me show you, this is the trade we are running currently, and our trade is moving a very good number of pips, a very good number of pips. 76.9236, 72.4, let's say 72.500. So almost 500 pips, 500 pips plus. So you can build a system, a rules-based system for yourself. And based on the way I'm looking at this market, I was unable to close the trade because I want to show you exactly where I got my own Fibonacci retracement on other volatilities. You can also use it. Let's even check some result. This is jump 75 index, but you can use it on any financial instrument. This is at non-global access for us. And see, anytime it reacts, let's assume we cap this highs now. Let me give you the instance. At object, pick our retrace Fibonacci, because this market is typically in a downtrend, so it's moving from high to low. So look at this market now, just look at it now. See, the market is typically in a downtrend. So after this wrong rally, because this market has broken below this new structure, let me tell you one thing: anytime market break its previous swing low or previous swing high, that would be a perfect time to look at the market very well. Give yourself time, watch the market, understand what the market is doing, so that you can be able to carve out your decision, add more confluences to your decisions, have more reasons to enter the market. If you have more reasons to enter the market, you always have more and more reasons to have profit in the market. Don't trade in isolation. A professional trader, a trader that knows what he's doing, he or she don't trade in isolation. What do you mean? What I mean by that? You don't isolate your decisions. Like, look at this market. Since I noticed the market was just trading a serious downtrend. See, higher lows, lower highs, lower lows, lower highs in this market. You see, lower highs, and I just go and cap this market because this market actually break a previous structure. You see, a market made a pullback here. After this pullback, that's when I will start observing this market. Then let's see, market came and react to what? This 50% retracement level. See, it also pushed up higher to what? To retest this 61.8% retracement level, which is exactly the breakout level. So immediately I get my confirmations from here. The market was unable to break above this 61.8% retracement level, and I got my confirmation. A candle, a good bearish candle, break and close below this level, and I see a bearish structure. and I have more confluences to my decision, probably a previous resistance acting as support or a previous support acting as a resistance. Anyone could be a reason to me. I can either use a price action, I can even use candlestick pattern. In my next video, I'm going to give you 5 candlestick patterns that can help you to improve your trading, especially for those that are trading boom and crash and volatilities. And also, I'm going to release a new strategy for you, a very good scalping strategy for those that want to always scalp the volatility indexes, especially the volatility 75 indices, because that's the best indices I always give time to when I'm talking to clients like this with respect to see. So you see now, as I just trigger my entry here, let me show you how I'll place my entry. Let me show where I'll enter my trade after this confirmation. Enter my trade here, and if market hit this 50% retracement level, I'm in profit already here. And market, you look at this market now, this market come down and even go down up to this 0 level. So assuming you capped out this trend, especially this short swing from this level down to this level, it's a very good thing. So please try to understand, you can use this Fibonacci retracement level to always better time your entries in trading, and also add more confluences to your trading decisions and have a very good and positive result in your trading. Nice to talk to you here. See you in my next video. Bye.
قال ألم أقل إنك لن تستطيع معي صبرا قال لا تؤاخذني بما نسيت ولا ترهقني من أمري عسرا فانطلقا حتى